Have a good afternoon here on this Thursday. I hope you're doing well. Welcome to our Selecting an Option Strategies webcast. I'm Connie Hill. Happy that you joined me here today as we discuss kind of what's going on in the markets and what strategies we might feel comfortable using given the circumstances. Today, we're going to learn a couple of tools, how you might be able to use those to help you identify maybe the strength of the current market direction or particular stocks that we're going to take a look at here as well. And these are a couple of tools we haven't used very much, but I think right now in the market we're in right now, they're very, very useful. All right. I hope you're following us on X. I'm Connie Hill CS. We have the pleasure of having Cameron May in the chat with us. He's Cameron May CS. Cameron's here to maybe help answer some questions I can't quite get to, or maybe a little bit off topic. He will help me out with some of those questions, but I will be watching the chat here as well. So if you do have questions, chat them in. Those of you that have questions and you're listening to this recording, when you have your questions, go ahead and put them in the comment section of YouTube, because we'll go back and review those throughout the week so we can make sure your questions get answered here as well. All right, let's go through our disclosures and I will lay out our agenda. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for information and educational purposes. Don't consider it a recommendation. We will be using the Paper Money software application. It's for educational purposes only. And a fantastic tool as you're testing out different things, whether they be indicators or strategies or whatnot. That Paper Money is just very valuable. Investing involves risk, including the loss of principal. Past performance of any security or strategy does not guarantee future results or success. Typically, we're going to take a look at what the markets are doing, talk about what strategies we might decide to utilize here. And then we always look at a lot of examples. We're going to look at a couple of our existing or winding up positions that we have before we get to our new positions, because it also will kind of set a stage for maybe how we might look at the market. Okay, but most of the time I would like to spend on new example trades. So let's hop on over to Thinkorswim. And let's jump over here to the charts. You can see I've got the SPX up here. Looks like we closed the day down a little bit more than 1%. It looked at like one point in the day, maybe it was starting to rally a little bit, but it just kind of fizzled out. And so, yep, we had that high day here on the 29th of October. So last week, hit an all-new high. Kind of came through here. Now, today's price action, I think, is important in that it looks like maybe it closed down through a support level here. If that's the case, that could be very interesting here, because there might not be some good support until right around here, about 65.58 or so. Support and resistance are ranges, so that's just kind of a ballpark figure. So this will be interesting to see if indeed the market continues to pull back here. Let's see what the NASDAQ did. And zoom in here as well. It hit that high last week. And it is kind of in the area. I wouldn't say that it's broken through the support area here. I would say it's maybe just hanging there. Maybe it will bounce. We'll see what that looks like. And so it ended up being down about almost 2%. Not quite. And then let's take a look at the VIX. Where do you suppose the VIX is? Do you suppose it's up? Do you suppose it's down? Well, we're probably going to expect it to be up a little bit. Ignore the implied volatility here on this. But in terms of where it is, ended about 1957. So it tried to climb up here a little bit. And I would say over the last couple of weeks, it's been a little bit more volatile. When it gets down in these lower ranges, from 14, 12, 13, 15, then it's a little bit less volatile, okay? And we typically are going to see more bullish markets. And so where it's raising up a little bit here, then we're seeing a little bit of implied or a little bit of volatility in the marketplace. Now I want to take our SPX and I want to actually do a different SPX here. We're going to do an SPX EW. EW stands for equal weight, okay? Some of you are probably really familiar with this, but on the S&P 500, the broader markets that index, I should say, is cap weighted, meaning the bigger companies in the index, they pull more weight compared to, say, a smaller company that doesn't have as big of a market cap. Who are those big ones? A lot of you probably know they are the Mag 7, right? And Mag 7 is going to be NVIDIA and Microsoft. It's going to be Google and Meta and Apple. And then it's going to be Amazon and Tesla. Oops, over there. Okay. They make up essentially on the S&P 500, where it's market weighted, those 7 make up 37%. So what does that mean? It kind of means, as we're looking at the SPX, these are the ones that are basically pushing the train along. They're pushing the index along. And so even though we have a lot more participants than 7, they're carrying the bulk of the weight. Okay, so that's something a little bit important to note. So as we come back to the charts and we look at an S&P equal weighted chart, which is this SPXEW, the trend's going to look a little bit different. Okay, so did we see new highs with this last week? We didn't. The last high, the most recent high here was back in October 3rd. Okay, so about a month ago. If we were looking at price patterns, we might look at this and go, ooh, it kind of looks like maybe a double top formation here, right? Where it's kind of run up to the same area a couple of times. Now, I'm going to put on my studies here, and I put on a study that we're going to look at here, but I hid it from view. And we're going to look at this one right here, which is a comparison. You just pull it up on the studies, you put in comparison. The default is the SPX, which is fine because that's what we're going to use is the SPX. And it's going to be pink. Okay, so I want you to see that. Now, when we look at this overlaid and compared to the equal weight graph, the SPX regular, okay, is this purple graph. And that's where we were seeing, yeah, it's been making overall some higher highs and higher lows in the same period of time where the equal weight is not. Okay. What does that mean? What do you think that might indicate? Tell your computer screen or your dog or me in the chat. Okay. That might be indicating that the strength throughout the market on this equal weight, man, it's not as strong as we might think that it might be just by looking at the SPX alone. Okay, that is going to be one of the tools that we're going to use here today. The other tool we're going to use is this relative strength down here on the bottom. And it's a little bit different than, say, RSI. RSI is relative strength indicator, but this means doing a comparison of. Okay, and so on this relative strength, it's on my studies here as well. If you were to try to pull yours up, you'll spell it all out, relative strength. And on it, it's going to compare whatever this entity is. So in this case, I've still got the SPXEW up. It's going to compare it to the SPX. And if it is trending down, it's weaker than the SPX. If it is trending up, it means it's trending stronger than the SPX. So just kind of looking at that as well, we can see, yeah, the comparison, the equal weight certainly is a lot weaker than the S&P in its regular state market weighted. Okay. So yeah, somebody put in here, Eric says, yeah, that's unbalanced growth. Yeah, most definitely. Okay. So based on all of that we've just looked at, and I do want you to answer this question in here, do you feeling a little bit more bullish or a little bit more bearish or neutral? Are you feeling more bullish, bearish, or neutral? Go ahead, chat that in. I'm going to look for your responses. I've obviously have my own idea about it. And I'm going to head back to our slides while you chat those in. because these are the strategies that we typically are looking at in this class, although sometimes, we've done some strategies that aren't on here. In this bullish market that we've had a lot of opportunity to really rely on these bullish strategies. Haven't done too much with bearish strategies. Maybe some of those might be interesting to us. And we've tinkered a little bit over here in some of the neutral strategies, including last week. And we'll get to that topic. Okay, so feeling bearish, neutral, sideways. Okay, says Sharon. Bullish, short-term bearish. Okay, so maybe not quite as bullish or optimistic as maybe we had been a week ago or 2 weeks ago, right? Last week when it hit another all-time high. Yeah. So this could put us in an area where we say, we're going to find some pockets of real strength and pockets of real weakness. And when we see that, we're going to use those tools we were looking at earlier, the relative strength index, or the relative strength comparing to the SPX. We're going to use that to look at some of our opportunities. Now, I have picked out today 3 bullish stocks and 3 bearish stocks. I don't think we're going to have time to get through all 6 of those, but I will run them by you, and as many as we can get into the trades on, we will. All right. So first up, let's go take a look at our existing positions and see what's going on with them. All right. On our existing positions, let's get rid of that big thing. Let's come over here to the monitor tab. And last week, we had done a couple of trades. We were comparing a short put vertical to a diagonal trade on Eli Lilly. Okay. This morning, we still had the put vertical in our account, but right now you can see there is no quantity there. The reason for that is it was just so appropriate to lock in the gains on it. Okay, so let's get to it. A diagonal, call diagonal, when we think about that, it kind of falls into the realm of a bullish to neutral strategy. Okay, and that's why we were comparing it to the put vertical. Now, in our class, the put vertical I put on was this one here, 860 on the call, and then the one that we've sold a little bit a week shorter, okay, this 855 call. And if we just compare the numbers here, okay, on our long call, man, it gained a lot in value. Same thing on our short call. All right, it gained a ton. And why is that? Kind of think through it. Why do you think maybe that happened? Well, instead of just having kind of a tepid move or just a slightly bullish move, Eli Lilly really took off. Let's go clean up studies here for a minute. Let's get rid of that comparison here. I'm going to bring back on our moving averages. We've got a 10 and a 30 like we typically use in this class. Now let's kind of zoom in here. We got in on this nice little bounce off the 10-day, and we weren't really expecting a whole lot because the stock's been kind of moving a little bit sideways, but slightly bullish. And so when you see something like that, that can be, when you're looking at that kind of a technical setup, something you might consider doing a call diagonal on, okay, where it's like a slight move, not a big move. And if you'll remember, we did the risk profile on it, and we could see ideally where we would want that stock to go, and it zipped on past it. Okay, you can see here I've got, let me kind of zoom in here a little bit. After our class, I put on a different diagonal. I wanted the risk to be a little bit closer to what we had on the put vertical, so I actually did a couple. And so one of the legs was an 855 on the call diagonal, and then the other one was 865. So they're kind of spread out by about $10. And so ideally in those long call diagonals, that's kind of where we'd want our target to be, is at those short legs. And what did it do? Man, it just zipped on by. Okay, that is why it was so appropriate. Get out of your put spread. You can buy it back for peanuts. Let's go see what that looks like in our account statement on Lilly. And let's maybe just go, let's clean this up a little bit, maybe just for the last 8 days, see if that takes down our orders a little bit. Well, I guess that didn't help that much. Okay, so here's our short put vertical. A $1.85 is what we brought in, and that's our maximum gain on that. And we were able to go buy it back today. Let's see on that. We were able to go buy it back for 20 cents. So I said peanuts, and it was about 20 cents. And you can see in here the order that filled on it was, let's see, we may have put that on to said, hey, if 70% of our max gain is reached at 55 cents, get us out of the trade. But then it went ahead and just executed at something a lot more generous for us. Okay, so then we ended up with a net there of 165 on the contracts. Okay, the diagonal, where do we stand with that those diagonals? We're going to go over to Eli Lilly, and here are nope, those I'm going to say hide simulations. We only want to see the positions, and we want to see this. We're going to have to adjust this a little bit here and maybe kind of move it along. And so we're treating these kind of as two separate diagonals here, okay? But it's wrapping both of them together because I just selected that. Oh, sorry. I'm making myself seasick here with those adjustments. Got nice and slow. All right. Where's our peak profitability on these diagonals that are left? Well, they're up here at those short strike prices. It's at 855 and then I think 865 for the two short strike prices. But since it went zipping along so far, man, it just is whipping us down into this range here, which our break-even line is right there at 0. So we're actually down here in quite a negative area. Now, earlier today, Eli Lilly had, it gapped up, but then it started forming a red candle. And I thought, ooh, maybe if the selling off pressure starts to get to Lilly, maybe that will give us some hope on our diagonal to not be quite so high and maybe move into a range here where it's not as big of a loss. Okay. Now, it still could get worse, though. If I come out here, what do we say? The stock is about what? 9? I think it was like 9. Let's see. We'll just look real quick. Closed at 937. Okay, so at 937 is about right. I'm close to it. 932, 937. Here we go. There's some sense. See, it can still get worse for us. Okay. Right now, we definitely have a loss, but it could get down in this range out here where it's like a lot more money to be lost. Okay. So I'm really kind of on one hand glad that this happened because we haven't done a lot with diagonals, and I wanted you to see that, yeah, it is kind of for slightly bullish for a call diagonal, just a little bit of movement that we want, not a lot of movement. Okay, and this really illustrated it well, where this thing went way beyond where we thought it might go. And I think there was some news that broke this week with negotiations with the pharmaceutical companies, including Eli Lilly, for their kind of negotiating a better price for Social Security people, so that some of those drugs are not so high priced on them. Okay, so I think that kind of gave it a little bit more oomph upon hearing the news that this week. Now I want to check the chat, see what the questions might be. So as you have them here on Lilly, yeah, Hill O'Keefe says Lilly helps keep one of the sector of healthcare. Yeah, it keeps helping it out because it is a fairly large component of that. Chuck says, why would a trade like this with such a small win area? Why? So the idea here is that it would be nice to go up a little bit, okay? But we didn't want it to go up a ton. Okay, when we got in here, the market was closed, and so the price closed on the day that we got in at 862. Okay, so we were looking at, say, like 865. And then I did another one just because I wanted the total risk to be smaller. But we really didn't want there to be a big move. And what's kind of interesting here, if you go to the trade tab, and I wanted to see what the beta was on this, because usually high beta stocks are the ones that really take off. And beta on this is a 0.37, which is really pretty low. So for a $1 move in the SPX, we would expect it to move about 37 cents. Okay, not nearly as much as what an average stock might move, but it was not really acting like a 37 beta. In fact, I came out here and I said, what would a fast beta be on that calculation? So I'm clicking on that flash, and it's going to bring up this little window here, which is under the setup menu. And so I came in here and I said, well, let me change it to the fast beta, which really measures, instead of 5 years back, just the last year. Because sometimes maybe stocks are doing something a lot different in the last year than they've done the previous 4 years, 5 years, okay? If you set that and change it to fast, it's going to apply to every stock, not just the stock we were looking at. Okay, so quite honestly, it didn't even change that much. It made it a little bit faster, 0.42 from 0.37. But still, I would say 0.42 beta is still relatively low. So I would say, news makes stocks move. And this one really moved a lot. Okay. Let me see here. I like this comment from Cameron that says, he said, sometimes traders who are comfortable with lower probability trades are typically attracted to higher potential rewards. Yeah. There's going to be traders of all sorts, but I think what I really wanted you to get out of here is, if we go back to our strategies, a call diagonal spread is over here on the bullish, but it's not super bullish. In fact, we talked a little bit about that either last week or the week before, how, say, like a long call and a synthetic stock are really bullish, super bullish, right? Long call vertical, kind of bullish. Short put vertical, well, we can let it go sideways if we want, and that's okay. And we could still be profitable on the trade. So yeah, there's always this degree of looking for big movement, looking for small movement. Okay. All right, let's see. Was there anything else? Yeah, seeing it on the Analyze tab, you're like, oh, wow. You mean if it really goes far, that's not a good trade for it? And so I really kind of would put the call diagonal and the put diagonal, I'd kind of maybe nudge them over to, slightly bearish and slightly bullish instead of very, okay, on that. Those are our trades we needed to follow up on. There is one more. Let's see. Remind me. Let's see what we still had left in here. I think we did Robinhood. It was still working for us, and we had done a trade on Robinhood. What happened to Robinhood? We got out of it today. Okay, let's go take a quick look at the chart. Oh, and actually, let's see. We had a long call vertical on this, and we were looking for the stock to go beyond 145. All right. Did it do it? Well, we'll see here. Here's our 140, 145 trade sitting here. I've marked it. And we could see what happened today. Well, they announced their earnings, and then we can see the market's reactions to their earnings today. So we went ahead, got out of it, taking a little bit of a loss on that trade. But technically, it had a technical breakdown for us. And so it's like when you notice it and you can get out, you want to salvage what you can. And that's what we ended up doing with Robinhood there. All right. Let's take a look at some other stocks. I think we're going to continue to see in the market some areas be really strong and some areas be selling off. A lot of stocks that had been strong in the last month, maybe there's some profit taking, maybe there's some concerns about valuation. And so we're seeing kind of a weakening of some stock trends that had been really strong previously. I'm going to show you 3 bullish stocks. We won't have time to complete trades on each of them. And let's maybe just go to, say, a 6-month chart here. In terms of identifying and looking at your stocks and saying, is it performing better than the SPX or is it going to get drugged down by the SPX? Okay, that's where this little relative strength comparison, how it can help us identify that, right? Because if we're seeing something we're thinking is really bullish, but it's not outperforming the SPX and the SPX is starting to struggle as we saw at the beginning, that might give us an idea. So here on this relative strength, we can see this has been upward trending recently. In fact, quite a bit the last few days, okay? That means it's doing better or trending more strong than the SPX is. So for anything that maybe we might want to consider in this class, doing a bullish trade on, we'd probably want to see this kind of a comparison that this is in an uptrend. And if we were to come along and connect, say, the lows here, that as we connect the lows, that they're definitely going up rather than down. Okay. On some bearish ones, man, we're going to want them to be steep down. Okay. So IBM kind of passes that test. That could be one consideration for a trade. Another one could be CrowdStrike. CrowdStrike, we can see here its relative strength really outperforming beyond the SPX. It's still having some strong uptrends, as we can see in its chart. And interesting today, at one point it looked like it was trying to get back above the 10-period moving average. It looks like it's pretty close to that where it closed tonight. And another one here, WDC, Western Digital. It has a real strong relative strength here as well. So these could be candidates for some things that we might be interested in going bullish. Okay, let's look at the bears. And then we'll put on as many of these as we can. On the bearish side, here's one that really crumbled today, DoorDash. They announced their earnings. I didn't go back and read the report, but we can see it basically fell through a couple of support areas and is just doing a big old swan dive. Its relative strength compared to the SPX, boy, is that steep. So for things that you see an entry on, you'd want them to be, not trending nearly as good as the SPX. If you wanted to, if you had, say, all technical type stocks, if you wanted to, you could do the NDX on them, right? Compared to the NDX instead of the SPX. So Dash, we might say, okay, if we have an entry signal on that, it's doing weaker. How about our little friend here, Home Depot? Well, Home Depot dropped through a support level today. It'll have earnings out here on the 18th, which is 2 weeks ago, Tuesday. So not quite a couple of full weeks, a week and a half. But see how this relative strength line headed down, down, down? That means weak, weak, weak. And one last one is going to be Workday. Workday is one that we actually have been watching a little bit here, and it had formed this little triangle. It was kind of bouncing around within the triangle, but we can see, maybe that line adjusts a little bit there, but basically it broke out of the triangle, okay? I could take this line and just kind of say, extend it to the right, and it'd be fairly close, okay? We might adjust it a little, but definitely broken down out of the triangle. So its expected target is essentially the height of this triangle here. So if we take the height of it, we duplicate that drawing, we bring it down here, we put it to where the breakout zone is, we can see it has still quite a ways that it could drop before it hits its target based on the height of this pattern. Okay, and what's his relative strength doing? Oh, yeah, it definitely is negative compared to the SPX, isn't it? Those peaks getting lower, trending down. Okay. Mary Burns would like to say, can you offer an explanation between RSI and relative strength? So relative strength is simply a comparison. And the comparison is to whatever you put in there. The default comes in as SPX here. And so it's basically comparing SPX price and entity price, like right now I've got WDay in there, and comparing price to it, and then it's seeing, well, what direction is it going? Is it going down or is it going up on that comparison? And so if we put in here, for example, SPX and compare SPX to XPS, what direction should the line be going? Flat, because it's just comparing itself to itself, which is kind of like a 1 divided by 1, giving us that flat line. Okay. The RSI is a totally different indicator that has in its calculation different price levels that it's doing some calculations on. Typically, we're going to look at it on a 14-day time frame, and so they're just completely different. But sometimes the name, because they're named so similarly, yeah, sometimes that can kind of catch you there. Thank you, Cameron. Cameron's also putting a detailed answer to that. All right. So, what do you think about those? Most of you were bearish. Okay. We still may see some areas that are bearish and some pockets that are bullish. But again, we've got that relative strength to help us out. First trade that we're going to start with here, though, we're going to start with Dash. We're going to start with this one. Some might be afraid of that it's being chased right here because it's down, that's 17%. But it's kind of like it's in this free fall zone. You know, if I come back here, we look at a 2-year chart, really, we're not going to get any support until about right here. I mean, even going back a ways. And so that's why I say it's kind of, I don't know for sure that it's going to fall or continue to fall, but there sure was a lot of selling off activity when we look in at, say, like this volume, lots of selling off here today. And so if the target is a kind of a ways down there, yeah, we could do something like that. All right. Where would we say we're wrong? Well, we might say we're wrong if, say, the stock tomorrow goes above this resistance, what should be resistance for it now. If the stock goes above that resistance, we'd want to say, ooh, exit the trade. I guess it's done. Yes, it's done. But if it continues to drop, then we're going to be kind of playing it to the bearish side. Now, trade-wise, there's a lot of different things we could consider here. Let's get rid of that. We are going to be using the December 19 options because even though there's a lot of liquidity in the stock, some of these weekly options just don't have a lot of open interest yet. Okay, so there's no use of kind of picking around there when there's just, it's not there. Okay, so we're just going to go out to the monthlies and use them. And I'll tell you, I was looking a little bit aggressively on this one. Okay, the target is down here about 169.53. I said, well, let's just bump it up to 170. So we've got a target going from 196 to 170, which is a pretty decent chunk. So sometimes when traders are putting together trades, if they want to do something fairly aggressive, say with a long call vertical, they might use where their target zone is to help determine what strike prices they might be interested in. So for example, we did a long put vertical here, and at the money right now, looks like probably the 195s. All right, 195s are at the money. And so many times we'll start at 195 and I'll just do a generic 195, 190. Okay, spread. But if somebody wants to be maybe a little bit more aggressive and they think, man, our target's out here at 170, they might choose some strikes that are out here. Now, some might not feel comfortable going quite that far. I mean, that's a 16 delta. And so on this, what I was looking to do here was 190 and 185. So maybe a little bit more out of the money than somebody might typically do to structure it a little bit more aggressively. Because if it has a big way to fall, sometimes it's nice to see if you can get a chunk of it. So let's do that. Let's go. We're going to say buy vertical. And we'll just keep this $5 wide spread. That's fine. And as we look at that, Actually, let me go back here. There's a little bit more open interest. I'm not liking that 3 right now, so it's a good thing we had 90 contracts come in today. What is our max theoretical gain here on this particular one? If we are going to say we're willing to risk $1.80, and we'll take the difference in the strike price, $5, that means we would be risking $1.80 to make $3.20. So I would say that's still fairly aggressive, even though we might have said on the chart, maybe we have a longer target, but let's kind of back off on what strike prices we might use, but to still have a fairly aggressive response there. Now I'm going to use my scratch pad, and I'm going to just kind of put in here our $1.80 as our max gain, and then $3.20 is our max loss. Well, if we could get a big chunk of $3.20, that would be nice. Do we have to get 100% of it, or it's really hard to get 100% out? Many times in this class, I'll even use 70%. What if in this one we even did 60% or 50%? Could we possibly be satisfied with that? Some people might be. You might have different expectations, okay? But say on $3.20, if we could get 60% of it, okay, we'll go multiply that by 0.6. That gives us about $1.92 of profit on it that we'd be interested in making. We'll add that to, I'm just going to use a minus to add them up, 1.8. So 372 is what we would put our buyback order at. Okay, saying we'd be happy at 60% of this. So we can risk $1,500 per trade in this class in our portfolio. So if we have 1,500 and we divide it by our max risk of 180, we can do 8 contracts. So that's what we're going to do, is our 8 contracts. And then we'll change this to first trigger sequential, and we'll just put in that order to get us out of the trade. If indeed the price of that spread gets to be worth, oh, now I forgot the number. Was it 362 when I added them together? I didn't write that down, did I? I was hoping it would stay in here, but I think it didn't. Okay, let me just recalculate it real quick, and unless you know the answer, it's going to be our 192 added to 180, 1.92 plus 1.8, okay, 372. Okay, that's what we're going to go for, 372. And we'd be happy as a lark if it got to that point. Would be happy to get out early and be on our merry way. Okay, so that's going to be trade number 1. And that's going to go in our option strategies bucket. All right. 372, thank you, PL Anderson. You remembered what it was. I was only sort of close. All right. Next one, let's use one. I'm feeling that we're going to see some bullish in areas and bearish in areas. Okay, that's going to be the bearish one, the dash. The bullish one, and I showed you a few that we could look at. Let's look first at, let's do CrowdStrike, CRWD. One thing I kind of like about CrowdStrike here is I like that the implied volatility is going up, so maybe it'll continue to go up because that helps in what kind of a spread. Is that going to help a selling spread? Like if we did a short put vertical, that actually would not help a selling spread. But it could help either, say, a long call or a long call vertical, right? As we see that implied volatility expand, increases the price of the option. We want the option price to go up. And on this one, I was really liking how it bounced back today. Didn't quite get down to the 30-period moving average. And what I did is I said, well, let me just run a Fibonacci on it to see where maybe a potential target might be. It's at all-time highs. It's never been this high before. Okay, and so our first target would be to get kind of back up here to the top at 555. And then if somebody wanted to, and they wanted to put on even a further out target, they might use, say, 608 and plan to be in the trade a little bit longer. Okay. But just getting even to the top of this Fibonacci might be really helpful. And even though we have this other target up there, it doesn't mean that it's going to go there immediately. Okay, so we're going to structure a similar type trade where we're going to use the December options here. We're going to use 550, 560. Let's see if this still makes sense. 550, 560. At the money technically is 530. So again, we're going to be a little bit aggressive on that. Because we have that target that's a little bit higher up. So we're going to do a buy vertical, a little bit out of the money. It's a $10 widespread. Okay. So we would be risking 390 to make what? That should be what? 610, right? So when you're talking reward risk, smaller risk, bigger reward. But again, we wouldn't be necessarily saying we got to get it all. Okay, 3.9, and then down here would be 6.1, right, is what our max theoretical gain could be. Let's plug it in here. If we are risking 390, I was just trying to think in my head how many contracts we could do. 1,500 divided by 390, we could do 3 contracts. Okay, so we'll do 3 contracts, and we're going to do a first trigger sequential on this as well. When we get a big old chunk that we're happy with, so a big old chunk here, let's do the same thing. Let's just do 60%. Okay, so 0.6 times 610 is 366, and we're going to add that to our 390 because get out at 756. Okay, 756. We're not going to be greedy. We would be happy if it made that kind of a move for us. Okay, we'll make this a good till cancel. Now, I do want to recognize this is a more aggressive approach than what we might typically do. Sometimes when I'm doing them, I'll do something that's a little bit more mainstream. Today wanted to look at, if it's really trending really strong way a certain direction, maybe set up a trade that maybe could capitalize on that. And we'll throw that in our options strategies bucket. Oh, all right. Ricebird said, oh, if I would have pulled out on the calculator, that's where it would have shown me if I expanded that right side. Thank you, Ricebird. I thought it was there somewhere. All right. Just to kind of summarize what we've talked about. We've covered a lot. We've talked about some additional tools you can use on the SPX. I do think I may have saw in here a survey link. Oh, we've got to talk about that. Once in a while, we'll offer a survey to you, which we always appreciate your feedback on. It's really easy. Put in on a scale of 1 to 10, plop, plop. It'll take you 2 seconds if you're slow. Maybe 5 seconds if you're slow. So really easy. A couple questions you can ask or answer if you'd like to. Okay. Or if you want to tell me something, use that space to tell me something. All right. We always appreciate it when you take the time to do that. When you fill those out, I like to incorporate some of your questions into our classes that we have coming up. Okay. So appreciate it if you do that. If you haven't subscribed yet, become a subscriber. It just makes it so much easier to find our content. Cameron, I appreciate your help here today. These folks do too, because we threw quite a few things at you today to help out with this crowd. So I appreciate that. So the last thing would be, if you found this useful today, go ahead, hit the thumbs up on your way out. And our 2 trades, I'm going to pull up our working orders. So we did a CrowdStrike long call vertical. We're doing a dash long put vertical. I'm going to have to watch these tomorrow, make sure they get filled. If I need to make an adjustment, I will, just to make sure that they get filled. We'll look at them every day. If they have a technical break, we're getting out of them. Okay, talked about what those technical breaks could be. All right, this is the last class of the night. So I hope you have just a great evening. We have some delightful weather where Cameron and I are. So hopefully you have some sun in your area. Tomorrow morning, we'll be back with trading Trader Talks, and it's going to be focused on ETFs. James Boyd and Kevin typically head up that class, but I'll be there with James tomorrow morning right at 9:30 Eastern. Okay, you guys have a great evening. Appreciate your participation here today. We'll see you soon. Bye-bye.